All right, so we're diving into BlackRock's Q3 2024 earnings today.
Okay, sounds good.
We've got the earnings call transcript, supplemental data, all that good stuff.
Yeah.
What are we seeing at the highest level here?
Well, the big takeaway is that BlackRock is setting new records
Really?
across the board.
Wow.
It's not just about the numbers themselves, though. It's what those numbers represent.
I see.
It's more than just a good quarter.
Yeah, when we hear record-breaking, what kind of scale are we talking about here?
We are talking about a staggering scale.
Okay.
Think $11.5 trillion
Whoa.
in assets under management.
$11.5 trillion, which is...
That's more than the GDP of most countries.
Exactly. It's more than most countries' entire GDP.
It's hard to even fathom that much money.
And to think, that's grown by $2.4 trillion in just a year.
In 1 year.
That's fueled by a few things.
Okay.
Obviously, market performance plays a role.
Sure.
But also there's this incredible influx of new investor money.
So people are moving their money to BlackRock.
It's like they've created this financial force field. Everyone wants in.
They actually called it an inflow tsunami.
I saw that.
$221 billion this quarter alone.
That's just mind-boggling.
Think a tidal wave of cash.
They've already beaten their total net inflows. For all of 2022 and 2023 combined, it's only Q3.
And here's where it gets even more interesting. This growth isn't isolated.
What do you mean?
It's not just one specific area. We're seeing it across the board.
Okay.
Different types of clients.
Got it.
All sorts of investment products.
Like what?
From active funds to index funds. And geographically, across various regions.
So it's not just one corner of the world that's suddenly enamored with BlackRock.
Right.
Everyone wants a seat at the table.
Everyone wants a piece of the pie.
Okay, let's talk about what all this growth translates to. Because impressive numbers are great, but they usually mean someone's making money.
It always comes down to the bottom line, right?
Exactly.
A 15% increase in revenue year over year.
Wow.
Setting another record.
For BlackRock.
Yes, for BlackRock.
So they're making a lot of money.
They are.
What about their operating income?
That surged by 26% year over year.
So they're not just growing, they're doing it smarter.
Exactly. They're becoming more efficient.
It's like they've found the secret sauce.
Right.
Bottled it.
And
are now selling it back to the market. At a premium.
That's one way to put it.
But they're not just sitting back watching the profits roll in, are they?
Not at all.
What else are they doing?
BlackRock has been making some pretty strategic acquisitions.
Like what?
They recently acquired Global Infrastructure Partners.
GIP.
Yes, GIP.
Okay.
Which adds a cool $116 billion to their client assets.
$116 billion.
It's not just about the assets themselves, though.
What else is it about?
It's about what GIP represents. Infrastructure.
Okay.
Infrastructure is a hot topic, and BlackRock clearly wants in on the action.
I see. So it's like they're building this diversified investment portfolio, but on a global scale.
Precisely.
But wait, they also announced plans to acquire Preqin, this data and analytics powerhouse. That feels like a completely different move.
It does seem that way on the surface, but there's a common thread.
What's that?
BlackRock is aiming to democratize access to what used to be exclusive investment opportunities.
Okay.
Private markets.
Private markets.
Things like private equity, venture capital, infrastructure projects, things that are usually reserved for the ultra-wealthy.
Interesting.
It's about opening up those opportunities to a wider range of investors.
So they're like the Robin Hood of investing.
I like that analogy.
Taking from the exclusive world of high finance and making it accessible to everyone.
That's a good way to put it.
But with all these different avenues of growth, where's the sweet spot for them? Where's the biggest chunk of their success coming from?
That's a great question. It's true they have a lot of irons in the fire, but there's one standout performer.
What's that?
ETFs.
ETFs.
Exchange-traded funds.
Right.
ETFs.
Think of them like those curated sample platters you get at restaurants.
Okay.
Get to taste a bit of everything. I like where you're going with this.
You diversify your palate.
Yeah.
Without ordering a full portion of each dish.
So ETFs are like the sampler platter of the investment world. That you diversify your portfolio without the hassle of picking each stock or bond.
That's the idea.
Genius.
And BlackRock is seeing the appeal. They reported an 8% annualized organic asset growth in their ETF offerings this past quarter.
8%?
That's significant growth.
It is.
And it's organic.
Yeah.
It's driven by new investors choosing BlackRock.
Not just market forces.
Exactly. They're not just riding a wave, they're creating their own current.
I like that. Okay, I keep hearing this phrase, organic base fee growth. And honestly, I need a translator.
Okay, sure.
What's that all about?
Think of base fees as the steady subscription fee that BlackRock earns just for managing your money,
Okay.
regardless of how the market performs.
Got it.
And organic means this growth is coming from new clients, not market fluctuations or acquisitions.
So their core business is strong.
Very strong.
Interesting. So a 5% organic base fee growth, which they reported, means more and more people are entrusting BlackRock with their money.
That's exactly what it means.
That speaks volumes
It really does.
about their reputation and long-term prospects.
Absolutely.
Okay, what about these performance fees I keep hearing about? Sounds a lot like those bonuses we always hear about in the finance world.
You're not wrong. While base fees are the reliable bedrock,
I see.
performance fees are the potential windfalls.
The bonuses.
Exactly. Those extra earnings BlackRock makes when they exceed expectations and generate higher returns for their clients.
It's a reward
You could say that.
for a job well done.
Precisely. And when you're dealing with trillions, those performance fees can really add up.
Yeah, how much are we talking about?
This past quarter, they brought in $388 million
$388 million.
in performance fees alone.
That's a huge jump from last year.
It is. This time last year, it was only $70 million.
So what's driving that increase?
A big chunk of that comes from the performance of one of their hedge funds.
Just one hedge fund.
Well, it had its annual performance measurement period end in Q3, and it seems like they hit it out of the park, resulted in a hefty performance fee for BlackRock.
So one fund can really make a difference.
It certainly can, especially when you're talking about these kinds of numbers.
Okay, but it's not just about one fund or one type of investment for BlackRock, right?
You're right.
They're seeing success across the board
Exactly.
in their equity funds.
Yes.
Their fixed income funds, too.
They're not putting all their eggs in one basket.
It's like that old saying, right? Don't put all your eggs in one basket.
Exactly.
BlackRock seems to be taking that to heart,
They are definitely diversifying.
building this incredibly diverse portfolio.
It's one of their greatest strengths.
It's
Like,
like,
it
wow.
makes them more resilient
Resilient to what?
to economic ups and downs.
Okay, see.
They're not overly reliant on any one particular market or sector.
So they're kind of like that friend.
Ooh,
It just
cool.
navigate any social situation.
I like that.
They just seem to thrive no matter what.
They're adaptable.
Let's go back to their acquisition of Preqin for a moment.
All right.
We talked about it a bit earlier, but I'm still a little fuzzy on the details.
Sure.
What's the game plan there?
It's all about private markets. BlackRock is making a calculated move into that world and acquiring Preqin with all its data and analytical tools gives them a real advantage.
Okay. For those of us who don't speak fluent finance, can you break down what private markets actually means?
Sure, it's not as complicated as it sounds. Private markets refer to investments that aren't publicly traded on stock exchanges.
Right.
So when you buy Apple stock, that's the public market. But if you invest in a small startup before it goes public, that's the private market.
Ah, so these are the kinds of investments that usually only the super wealthy get in on.
Traditionally, yes. They typically have much higher minimum investments
I see.
and less liquidity than your average stock or bond.
So it's harder to get your money out?
It can be,
But
but they also have the potential for much higher returns. And they offer some serious diversification.
because
They don't always move in sync with the stock market.
Okay, so is BlackRock trying to make these private market investments accessible to everyday investors?
That seems to be the strategy.
How would that even work?
Well, they're gaining a lot of data and expertise on private markets through Preqin, which they can then use to create new investment products.
For a wider range of clients.
Clients who wouldn't normally have access to these types of investments.
Exactly.
So it's like they're opening up a whole new section of the investment menu.
That was previously hidden.
Exactly. But with this potential for higher returns, wouldn't there be more risk involved as well?
You're right. Higher potential returns usually come with higher risk.
So what are the risks with private markets?
Well, for one, they tend to be less liquid.
Yeah.
It's not as easy to cash out quickly.
Got it.
And they generally require a longer-term investment horizon.
So you need to be willing to let your money sit for a while.
Okay, so probably not the best option. For someone who might need to access their money quickly,
Probably not.
or someone who panics when the market dips.
Right. It's not for the faint of heart.
But for someone with a longer-term view and a bit more risk tolerance, private market investments could be a valuable tool.
Exactly. It's all about understanding your own financial goals, your risk tolerance, and your investment timeline.
That makes sense.
And BlackRock seems to be betting that private markets will become increasingly important to investors of all levels in the future.
So they're positioning themselves as the go-to guide.
They want to be the experts in this space.
It's a bold move.
It is?
Will other major players follow their lead?
That remains to be seen.
It'll be interesting to watch how it all plays out.
Definitely.
Okay, let's talk about BlackRock's acquisition of GIP, Global Infrastructure Partners.
Right.
That was a pretty big deal.
It was a major move. That solidified their commitment to infrastructure.
And it's not just about owning roads and bridges, is it?
It's so much more than that.
What else falls under the umbrella of infrastructure?
We're talking about the backbone of how we live and work. Transportation networks, like airports, shipping ports, even those futuristic hyperloops.
Right.
But it also includes energy systems, renewable energy projects, smart grids, and we can't forget about water and waste management systems, telecommunications, even social infrastructure like schools and hospitals.
So it's like they're building the world of tomorrow, and BlackRock wants to be the financial architect behind it all.
That's a great way to put it, and these projects are so essential. They often come with long-term contracts and predictable revenue streams.
Which is appealing to investors, especially in uncertain times.
Exactly. It's a safe bet.
It's like the difference between investing in a trendy gadget and investing in the power grid.
You get it.
One is flashy, the other is fundamental.
And let's not forget the feel-good factor. Investing in infrastructure can have a real positive social impact.
You're helping to literally build a better future. So you get a potentially profitable investment that also contributes to the greater good. That's a win-win for sure. But let's bring it back to private market investments. How would that work for everyday investors? Would my financial advisor be suggesting I add a toll bridge to my retirement account?
Maybe not a toll bridge specifically, but you're getting the idea. Imagine investing in a portfolio of private companies or real estate even, all through a simple ETF.
Instead of needing millions of dollars, I could buy a few shares of an ETF and get in on those opportunities.
Exactly.
That's a game changer.
It is about access.
But let's be real for a second. Private markets aren't without risk, right?
That's true. You always have to consider the risks.
It's not all sunshine and roses.
Private markets are less liquid. It can be harder to get your money out quickly.
And these are long-term plays, right?
Yes, you need to be patient.
So you need to be prepared to ride out the ups and downs.
It's not for the short-term trader.
This sounds more like aging a fine wine than a quick cup of coffee.
That's a great analogy.
But if you're in it for the long haul, and you're comfortable with a bit of risk, private markets could really pay off.
BlackRock certainly seems to think so. They're betting that more and more people will want in on this in the future.
It's going to be interesting to see how it all unfolds. Will the other big players follow suit? Will we all be talking about private market investments over our morning coffee in a few years?
Only time will tell.
Well, one thing's for sure. BlackRock is shaking things up. They're changing the way we think about investing.
They're not just managing money, they're shaping the future of finance.
So let's wrap up this deep dive. What are the key takeaways for our listeners today?
BlackRock is on fire right now. They're attracting massive investments, generating impressive profits, and strategically positioning themselves at the forefront of this new wave of finance.
Through private markets and alternative investments.
Exactly.
It's a bold vision.
And it's a story worth paying attention to.
Absolutely. So the next time someone brings up BlackRock, you'll be ready to impress with your knowledge and insights.
You'll be the expert.
Until next time, keep exploring, keep learning, and keep diving deep into the world of finance.